Shout out to IC Market. We say thank you IC Market for sponsoring the video of today. IC Market is a brokerage firm that allows you to deposit money with them and trade. That is the brokerage firm that I actually use. I've actually been waiting for this sponsorship for a very long while, and thank you IC Market for giving this opportunity for sponsoring this video. At the end of the month, I'm going to be giving out money to 2 most active traders. In order for you to join in that, make sure you use the link in the description box to sign up. That's the number 1 way. And number 2, you have to make sure you fund your account with minimum of $200 and above. All right, and third way, just trade, go about your normal trading. By the end of the month, I'm going to select 2. Then the first person is going to win $150 and the second person wins $100. So that's it on today's.
Hi, my name is Benson.
Gift Ubakwe.
William Joseph. Steve.
My name is Mary Irekechidima.
Sukomi.
Henry. I'm Jeffrey Benson. I'm a professional forex trader. So the goal is to teach you how to trade forex profitably. And that's what I do for a living. I also want you guys to be very profitable at trading forex. So you guys are welcome on board.
Yeah, today's meet and greet or hangout, traders hangout is just for us to like network. I'm sure you guys already collected each other's number. So today I'm just going to be going over, let's say, like my winning strategy. So the basic thing I look out for in trading, this is what I'm just going to be going out for. Like, trading has 3 major patterns that we look out for, 3 major topic subjects. So number 1 is you need to have a winning strategy. What I mean a winning strategy? Your strategy needs to have an edge. Okay. And the second thing is you have to have managerial courses like your trade management, money management, risk management. They are very paramount. And the third part is your strategy. In your strategy, in building your strategy as yourself, you need to have a very good trading psychology. So these are the 3 most important things in the trading world. Yeah. When I'm talking about trading psychology, I mean this is the biggest part in the whole of this quadrant. Sharing them in terms of percentage, trade psychology has 60%. Yeah. The managerial courses, that is risk management, money management, trade management, they have 30%. And this trading psychology, like the trading system, which is your strategy, is just 10%. Now you wonder like why a lot of people chasing the strategy here and there. People chase strategy just because they feel it is a strategy that actually gives money. That's wrong. It's not a strategy that gives money. All right. I'm not saying strategy is not important. It's as important as every other one. Just like a 3-leg chair. If you remove one of the leg, you'll be imbalanced. You probably may fall. Yeah. So, but the one that is most important is the psychology. But you know, let me just break down the trading psychology. The trading strategy that I use. It's pretty straightforward. So, any strategy, I won't really emphasize this one. Any strategy work. Whether you're using mechanical base or you are using discretionary base, whether you're using price action or you're using indicator, just to make money. Alright? That's the most important thing as regarding strategy. So what I do is just basic stuff that you all probably must have already known and you have already watched from my previous video. So if you've not seen that from my previous video, make sure you just check around my YouTube channel and watch it out. Alright? So the first thing I do, since I'm a day trader, yeah, the outlook you should look out for as a day trader is 4 hours, 1 hour and 15 minutes. That's what I do at least. So 4 hours determine my main trend, 1 hour determine my current trend, and 15 minutes determine my entry time frame. Yeah. So all I'm just gonna do is, since this is 4 hour time frame, I'm just gonna like bring out trend lines and map out trend lines. So another level that I also use is hand low of the week, and also our psychological levels. So let's go ahead with the trend line first. So this is a trend line. So the principle of drawing a trend line, you need to have at least 2 peaks or 2 troughs. So here is a trough, yeah, and here's a trough. So we've got a valid trend right there. Another thing to trend line is you have to make sure it is relevant. Yeah, the relevancy test. Relevancy test simply means if the trend line if it is relevant to the current chart that we are in, the current chart. Yeah, as of this one, is it a relevant trend line? No, it is not relevant because it does not have anything to do with where the price is right now. It does not affect here, or it does not seem to affect it any time from now, like sooner. All right. So this is a very valid trend line. Few hours ago it was valid, but right now it's no longer valid. So another principle of psychological level are just basic random numbers like 5, 10, 15, 20, 25, 30, 35, like that. So but in this case it's different. We use 50 pips difference. So you're going to see 50, 100, 150, 200, 250, 300, 350, like that in that sequence. So but since your chart, each chart is different, yeah, you have to first look at the current price before you start putting up a psychological level. On the psychological levels, all I just do is just look at the current price, then pick the horizontal tool and try to mark it up at a psychological level. Let me just add one so you understand the whole concept of how psychological level works generally. So this is 1.900. So the next one is going to be 1.9500 to the up. So just like adding 50 pips from one distance apart. So it's going to be 1.95. Yeah. So drop it again and just manually change. Yeah, so that's it. So to confirm whether you are correct in any psychological level, just take your ruler to measure from one distance to the other one. It must be 50 pips. That's how to cross check whether you are correct or not. So it always has to be 50 pips. If it's more, it's a problem. If it's less, it's also a problem. So you can see it's exactly 50 pips right there. So that's it. And that's one cycle. So you can add as many as relevant as you want to add. So now the next principle I also use on the 4-hour time frame is to determine my high and low of the week. How do I determine my high and low of the week is to make sure I have the first 4-hour candle. First 2 H4 candles. So the first 2 H4 candles determine the high. So if we have a decision candle break down first, that means we are going to be having more sales for the week. So that was when she said like we are going to be having more sales for the week, according to our fundamental analysis, I said yes. Even our analysis as a technical trader, it's more sales for the week. So that's why I was even selling crazy yesterday by saying because this was actually a high of the week that it bounced. So now how do you get high of the week? All you need to do, you have to go to settings. So when you get to settings, you go to appearance, and appearance you click on session break. The way TradingView does that is they break it to daily actions. So since today, today is Thursday. So this is action that has been happening from here. This is Thursday, So Wednesday, Tuesday, and Monday. So the first candles to form during the week, the first 2 candles to form. So this is the first one, this is the second one. All we need to do, we need to use the ray button. This is horizontal ray, This ray will not just extend all everywhere. It just starts from where you drop it off. That's the difference between that and the horizontal one. So that's the highest point of the week, and this is the lowest point of the week. So what we do here, I'm still going to explain. We use the highest, either of the two, the first 4-hour candle. So either of them could actually be the highest. So it could either be the first one or the second one. You get. So this is the first one right here. This is the second one. So we'll note the highest point either of them ever got to, and we'll note the lowest point. So this thing always happens first thing Monday morning, first 4-hour candle. So then the next thing is decision candle. Decision candle is the candle that either breaks out of this zone or beneath out to the upside or to the downside. That's a decision candle. So clearly seeing now, which one is decision candle? Is this red one? Correct? So that simply means we are going to be having more of sales for the week. So each time it breaks the downside first, and when I mean break, it has to be the body of the candle. So anytime that price retraces to the upper one, you know that it's definitely going to drop because this is the highest point that price will ever get to for the week. So that's why if you notice yesterday, I was selling. When price go here, I just said, okay, this was just noise. From here, it must drop. That's the concept of high and low of the week. So let's move straight fast to the next one. So I look out for my entries on 15 minutes time frame. That's because 15 minutes tells me a lot more information on as regarding entry. So all I just look out for on 15 minutes is I'm looking out for when is it time for me to go long, when is it time for me to come short. By looking out for my price action. So all I want to see are my levels I want to see confluences, and I also want to see weak rejections. Yes, that's what I'm always looking for. So now imagine when price was about, like this trade I was really short on yesterday, you all remember, So because I saw that price got here, there's a psychological level close by. If I put there's a psychological level close to the side. So let me put the nearest psychological level to that point. So just I didn't fill it up to that end. So the nearest psychological level to that point would be 1.41 or 1.41. That's the nearest psychological level. 1.41. So that's the psychological level close by. So you notice the news actually happened on top of the psychological level and it dropped aggressively. Alright? So what confidence? I just trade based on confidence. So some people ask me, when do I trade? I don't have particular time that I trade. It's until I see 3 at least out of my 4 confidence. That's when I pick my trade. It's that simple. 3 out of 4, like I either see trend line saying I should sell, psychological level saying the same thing, and my chart pattern saying the same thing. Or I see my high and low of the week saying the same thing, my chart pattern saying the same thing, and my trend line saying the same thing. Or if I have 4 out of 4, like in this case, superb. That's 100 standard lot trade for me. Yeah, like I go really aggressive. So that's that on the strategy. So I don't really want to waste more time on this. You remember, strategy is just 10%. Yeah. So no matter what strategy, it's not compulsory you stick to this one. You can actually be using this one. Yeah, the one you already have. But another thing that is really most important is money management. So money management, risk management, and trade management. I want to treat everything together. Now, this is a disclaimer. If you are flipping an account, just know that flipping. Which other way can I put flipping that so that you know that flipping is not good? Okay, flipping is illegal. Let me put it that way, because if you are flipping is not professional, not that I mean by it's illegal, not that you cannot do it. I'm only trying to let people know who are watching me that it's not good for newbies. But if you know what you are doing, you can actually flip. But in flip, you know that okay, I can set to risk this X amount of money I'm depositing. Like I flipped an account of $47 to $1,000 in 8 trading days. So if you have not watched that video, use this link here to check it out. So how I did that was $47. I started with 25% of my account. So upon 25% of my account, if you do the math, I'm going to be risking 0.05. So I did 0.05. I split the total places, which gave me 0.01. Yeah. So 0.01, I started scaling in. So I only scale in multiples of 0.01. What I mean in multiples of 0.01, that is 0.01 times 2, which is 0.02. So 0.02, I went to 0.05. From 0.05, I went to 0.1, which is 10 mini. From 10 mini, I went to 20 mini. From 20 mini, I went to 50 mini. The same pattern. From 50 mini, I went to 1 standard. 1 standard, 2 standard. 2 standard, 5 standard. From 5 standard, 10 standard. Like that. You understand the scaling? Yeah? So that's how that works. Risk management, trade management, and money management. So as regarding psychology is super straightforward. You have to be very tight up there, and you have to know that everything is discipline. Discipline, discipline. If A, B happen, I'm gonna do C. That's trading. There's nothing like perfect analysis. I don't want to know what you know. I don't want to know how many years you've spent. Yeah? There's no Forex can go crazy on you anytime. If you think you are really good whatsoever, anything, it can go crazy. So the best thing is have a strategy, have a plan, trade a plan, and also follow your risk management. That's the holy grail. Here's where psychology can become complex. You know, in trading, you don't judge yourself by 10 trades. You don't judge yourself by even 1 month result now. If you do that, you are probably just a newbie. You have to judge it. That's professional investors who will ask you, what have you done in this quarter? They don't ask you, what have you done in this month? No. What have you done quarter 1, Q2? That's why you even see Apple, big stocks, Facebook, they give quarter reports and annual reports. So they don't give monthly reports. That is just within their carcass. Yeah? But the serious report that actually move the market quarter, annual. What am I trying to say? If you're judging yourself with 5 trades, then you're probably newbie, because 5 trades doesn't judge whether you're a good trader or a bad trader. No, it doesn't. If you're even allowed to have 5 losing trader, that doesn't mean you're a bad trader, you're still a good trader. Now, one thing that people won't tell you even on YouTube is delving deep. It could be like, okay, I say you don't judge yourself with 50 trades, don't judge yourself with 100 trades. Let's say you took 1,000 trades, yeah? Yeah, and you have 50% win rate. You are using 1 to 2. That is to say, you lose 1,000 divided by 2, 500. You lose 500 times and you won 500 times. So if the time you lose 500 times, that is you are losing 1 each time. And if you lose, you're losing twice. So 1 times 500, that's 500. 2 times 500. 1,000 minus 500 is a positive 500. Now here's where it can be tricky, where psychology comes in. You know, when you are trading, you can have when I mean a loss, win, loss, win, loss. Now the question is, when you have loss, will you see how that same psychology to take the next trade to even give you win or loss? That's where the thing comes in. Will you want to doubt yourself? And listen, you start looking for no. My strategy is not sure. Let me look for Jeff Benson's strategy. That's where we feel. So that's where we start thinking, okay, my strategy is not good. That's where newbie traders get trapped. That's where brokers report that more than 90% of traders are losers. They lose money. So when you're having win, it's too extra. When you're having win, won't you throw risk management away? Now I've cracked this thing. I know how this thing works now. I will milk them dry, and then you just go with. You don't know what you're risking again. Like sometimes, maybe before I can ask some people, okay, how much you risk per trade? I'm sure some of you may not really know what you're risking. Just know you're trading. You're trading with 0.02. You're trading with 0.0. You're trading with 0.2. You may not really know the percentage you are risking per trade. Yeah. Yeah, it happens like those are the things that put us. You're about to go back somebody. Those are the things. So if you have win, it may get into your head. So if you have loss, it may get into your heart. So those are the things. That's trading psychology in simple sentence. Shout out to IC Market. Say thank you, IC Market, for sponsoring the video of today.
Thank you guys for watching this video till the end. And if you watch to the end, there's definitely a promo for you. All you just need to do is to check the link in the description box, sign up with the link on IC Market, form with $200 and above, and you definitely will stand a chance to win one of the most active traders at the end of each month. All right, here's another thing. First, I'm sure you guys enjoy this video as much as we enjoy making them for you. So if you do enjoy this video, make sure you like, subscribe, turn on post notification, and also comment in the comment section. And I'm sure you all got value for today's class, yeah?
Yes.
And what would you guys say?
Bye guys.
See you guys.